This I've really anticipated this because Greg Boutle takes equity strategy, folds it into the derivative space, wraps it around a true international view for the BNP Paribas. Is that like the French way to say it? That come close here?
My French isn't outstanding, if I'm honest.
They have the best lunch in Manhattan, is what I know. Please advise us here how you prepare for a Monday research note. A completely unfair question. It could change 3 times. But how are you framing the tone of your weekend note?
Well, I think you have to be prepared to write it and then rewrite it 3 times in between now and then. So I think the thing that we're trying to do is put in context some of the moves around some of the flows, and then think about some of the headline risks. But then ultimately, how does that translate into what we're going to see over earnings season?
Okay, earnings season. It's tomorrow, right?
Yeah.
Indeed.
Come on, we don't have, I guess we sort of do on this earnings season, but there'll be no guidance, right?
No, so I think like the backwards looking data, whether it's the CPI we've just seen, payrolls from last week, or the earnings prints themselves, hold little value, I think, at this point. But any qualitative read, commentary, tone from management is going to be looked at very closely.
So what did you see on your trading desk? What did you hear from your clients over the last, I don't know, 24, 48 hours? Because yesterday was just crazy. The bond market the night before was just incredible.
Do you know you can't get hired at BNP Paribas unless you know all the Greek letters? Alpha, beta, gamma.
That's what I
epsilon, rho.
Derivative stuff.
Samro, the whole thing.
So we think some of those Greek letters were certainly responsible for some of the magnitude of the moves yesterday. So obviously the move itself is triggered by the headline, the tweet, but the magnitude of that move is driven by the fact that we do have a short gamma complex in the market. What this means is that there's re-hedging needs for when the market moves, both lower and higher.
I opened the show this morning on this. People got to go out and re-hedge. Folks, you and I are not re-hedging at home. We're trying to pay the rent. But in the institutional space, people are protecting themselves, and now it's so expensive to protect yourself, you really can't re-hedge, can you? How you doing it?
Well, I do think there are opportunities to use the optionality complex. We look at the headline levels of the VIX and certainly where it peaked, and they got incredibly elevated. But one anecdote that I would give you, at the close yesterday, you could look at the NASDAQ, and the market options implied probability of it getting back down to yesterday's lows by the end of next week was more than a 10-to-1 payout. So I think there are interesting asymmetries that you can find.
So where did you see on your desk yesterday the buying, or where did you see the activity yesterday?
There were different pockets. So we have an equity positioning indicator that tracks institutional positioning, and it got to absolutely washed out levels before yesterday.
Really?
So institutional positioning is very clean. But what we have seen is just consistent dip buying more from the retail complex. So if you look at net ETF flows in the US yesterday, you saw more than 10 billion of inflows on the day. At the same time, some of these rebalancing flows that we've talked about have been a dominant force in the market. So we think there was more than 55 billion driven purely from the short gamma complex yesterday.
Short gamma. We have seen institutional capitalization in positioning. I've been trading for 40 years. I have no idea what that means. What does that mean?
Yeah, so in terms of capitulation in positioning, we track various metrics. Some of the systematic funds are easier to track, things like CTAs.
Right.
We know that those funds move to a net short position. Volatility target that manage capital based on the levels of volatility have become extremely de-risked. But you can also look at things like hedge fund positioning. You can use things like the CFTC futures data. You can see that there has been a massive degrossing.
Okay, there's been a massive bill degrossing. Okay, great. But the answer is, where's the blood in the streets? Without getting, I don't want to mention names here, that's not appropriate. But when somebody has the cliche, there's blood in the streets, where do you and BNP Paribas suggest there's been some real damage?
Well, I would say that actually, like when we think about the US equity market, and particularly the volatility market, it has been maybe a little bit more orderly than it seems on the surface. So when we look at our positioning indicator, it had been trending down a long way prior to the tariff announcements. And we think about this announcement, nobody was expecting the magnitude of the moves, but this was a known unknown in terms of a catalyst that we do think people were hedged for. So when you look at the Thursday move, I think that's quite indicative of actually a calmer options market than you would expect. We got a big move higher in the VIX Thursday, but what we do is we look at the size of the VIX move relative to the size of the S&P move. And in normal calm markets, what you see is the VIX go up 1.5 points for every 1% decline in S&P. And that's actually what we saw on Thursday. You compare that to other pockets of risk, and that move is much more explosive.
And folks, stay with us here on this. There's a little bit of jargon we're doing here, but we're thrilled to have Greg Boutle, BNP Paribas, with us. You were cautious in the bull market emotion of the recent year or two or three, and now we've got the market back to a Greg Boutle level.
Yeah.
Do we now have an equity value in the market where we're now where you always thought we'd be, or do you need to see some catharsis here to really step in long?
I think it really depends on ultimately what do you think the growth outlook is. So if you believe that this volatility and this news flow in terms of tariff isn't going to derail the growth outlook, then a 20% correction, which is where we got kind of highs to lows, is at the extreme of what you get without a recession. However, when we start looking at where do we think earnings could be this year, if you've got a 255 number for S&P earnings, that's a 5% year-over-year growth. That's not overly bearish. Put that on an 18 times multiple, that would get you around 4,500. So I'm not sure that there's a really obvious value case to make for U.S. equities here.
Do you have a belief in European equities?
So I think one of the things we saw at the start of the year before this episode of volatility was that there was undoubtedly rotation starting to happen from U.S. into the rest of the world. Now, clearly, what has happened in terms of trade and tariff has derailed that in the short term. If we do get back to a more stable market, then I do think there is potential for that rotation to continue, but not whilst we're in a volatility environment such as this.
All right, Greg, Tom, if we take the Bloomberg Surveillance Show over to London, do we do a day trip to Southend-on-Sea?
I think it would be extremely
And what
pleasant.
would we do there?
I think you would take a walk down the seafront. Maybe you go and try and catch a game, have a beer. I think you can have a great time.
Southend, it's on the estuary, Tom.
It is on the Thames estuary,
of the
yes.
Thames River. Right
It's out past Charles Dickens' place.
I think so. I mean, it looks great. I'm looking at it right here, and that's where Greg's from. So I figured we'd ask a local here.
Take a walk down the pier. It's very
Have
pleasant.
you ever been to Dickens' house in Rochester, the one that he
I haven't.
bought late?
No, I haven't.
It's supposed to be magical. It's
Oliver's
it's
on the beach for
hugely
coffee.
extant of what Dickens was when he was there in 1860, 1870.
Okay.
Have you ever finished?
the Castle Pub.
Have you ever finished a full Charles Dickens book, or did you use the United Kingdom Cliff Notes?
Well, maybe I listened to the audiobook.
Yeah, there you go.
Greg, thank you so much. Really, and congratulations on the work. The derivatives base here, folks, the French, and this goes back hundreds of years. There's exquisite mathematical integrity out of the French banks. This gets them into trouble sometimes, but good morning to the Paris banks for all that they do, particularly using the Bloomberg and derivative equity measurement, as we did for Mr. Boutle as well.